Hey everyone, it's been a while since I talked about the companies in my portfolio. Today I am covering two of them, Reysaş and TAV Airports. Let's start with Reysaş, my biggest position by far. Currently I only own Reysaş GEO, the REIT, with about 85% of my portfolio in that one ticker. For those new to this company, let me break down the basics. The REIT builds and operates warehouses throughout Turkey, with most concentrated in the Marmara region, which makes sense since that area represents roughly half of country's economy. These are prime warehouses, both in location and quality. Most have solar panels installed on the roofs, generating about 5% of the company's income, and they have had north of 20% return on invested capital for the company in my estimations. Demand for these warehouses has been through the roof since the pandemic, while supply remains limited and grows slowly. This gives the company massive pricing power, and we are seeing rental contract renewals at much higher rates than ever before. And we are talking top-tier clients here: Carrefour, Mercedes, Toyota, IKEA, and similar global brands. What really excites me is their project returns. My estimates show at least 20% return on invested capital on the low end, and sometimes exceeding even 30%. Also, the valuation is ridiculously cheap. Turkish REITs must get third-party valuation reports on their assets annually, and the 2024 report showed about $1.6 billion in assets of these warehouses. Yet, the company trades at around $730 million, less than half of its liquidation value. That's not even the whole story. Personally, I believe the real value easily exceeds $2 billion. And remember, they are still investing at those high rates I mentioned earlier, so it only grows from here. Their net debt sits around 3.5-4 billion liras, which is less than my expectations of their expected 2025 rental income, which is around 4.5 billion liras without the inflation accounting effects. With a market cap of 28.5 billion liras and roughly 4 billion in projected cash earnings this year, you are looking at more than 14% yield. And again, that's with more than 100% upside to the liquidation value. I honestly could talk about Reysaş for hours. To me, this investment is so obvious, it is like getting hit over the head with a rock by a caveman. My investment radar is just screaming. You don't even need Excel for this one. But of course, that's just my take. And if you have followed me, you know I have been invested in Reysaş for years now. And as I said, I currently have that massive 85% allocation in the REIT. Now, Reysaş has another ticker, Reysaş Logistics, which owns 62% of the REIT's shares. The REIT was actually spun off from Reysaş. Beyond the logistics and the REIT holdings, Reysaş has a few other businesses that aren't major contributors yet, although some, like their railway division, could be huge down the road. For now, it is primarily logistics and the REIT. The logistics division made around 1.4 billion liras last year, but we get much less reporting on the logistics side compared to the REIT business. I used to hold much more logistics shares than the REIT, but logistics had run up significantly while the REIT was flat in comparison. So I sold my Reysaş position to increase my REIT position, which worked out incredibly well. I sold Reysaş at an average of 37% premium to the REIT, and that premium has now collapsed to just 7%. Considering Reysaş was over 60% of my portfolio, this move has been tremendously profitable for me. I will get to TAV Airports next, but in short, Reysaş keeps compounding, and I have zero intention of selling or even trimming. Since my first video about Reysaş, the company is up more than 4 times in USD terms, and at one point it was up over 7 times. If you want to access to my detailed analysis, tracking sheets, and more on these companies, you can check out my Patreon. The link is in the description. Now for TAV Airports. Let me refresh the basics since it's been a while. TAV operates airports through concessions, paying governments fees for the right to manage them for specific periods. The business model is straightforward. Governments cap how much TAV can charge airlines because otherwise they would have just too much leverage. Think about it. If you are an airline that sold tickets for a flight landing in Antalya, you can't exactly negotiate or threaten to land elsewhere. Without these caps, plane tickets would cost so much more. The good news is that despite most of their airports being in Turkey, these fees are set in hard currencies like euros or dollars, and they are indexed to inflation. Interestingly, Turkey's share in TAV's business has been declining over the years. About 5 years ago, Turkey represented around 60% of TAV's revenue, but now it is down to about 35%. The other side of TAV's business is their service companies, which is where they really differentiate themselves. Most airport operators don't own service companies. They typically rent out these areas to third parties for a fee or revenue percentage. TAV does everything themselves, and this is where the real growth potential lies. They can't raise what they charge airlines per passenger or plane, but they absolutely can decide what to charge for food at the airport. And if you have ever been hungry at an airport, you know you are not exactly spoiled for choice. As the joke goes, you will not financially recover from eating at an airport. Looking at EBITDA margins, airport operations appear better with higher margins, but that's misleading. Operations don't cost that much to run, hence the high margins. But growth is limited by concession terms. Service companies may have lower margins, but can grow without such constraints. TAV's crown jewel is Almaty Airport, where they don't have a time-limited concession. They outright own 85% of it. These deals almost never happen, and they scored this one during the pandemic. If they decided to sell this asset today, I believe the price would exceed their entire market cap of around $2.2 billion. In 2024, they significantly expanded Almaty Airport, and in 2025, Antalya Airport. Both new terminals are now operational, meaning the major capex period is behind them. When I first covered TAV, they had a market cap of around $1 billion, with substantial capex ahead, a lower average concession period, and much higher debt multiples. But analyzing the business, especially with Almaty in the portfolio, the future looked bright. Now, with most of the capex completed, they will resume dividends starting in 2026. What I will be watching for is the growth of Almaty and Antalya airports, plus the performance of their service companies. As for recent updates, in 2024, their passenger numbers grew by 11%, with international passenger, which is the more profitable segment, growing by 13%. International passengers bring in almost 3 times the revenue compared to the domestic passengers. In Q1 2025, which is always seasonally the weakest quarter, the passenger numbers grew 4% year-over-year, with international passenger up by 5%. This was lower than expected, but management doesn't consider it representative of what's to come for the rest of the year, citing several temporary headwinds. Looking at financials, their revenue and EBITDA CAGR from 2021 is an impressive 48%, while passenger growth for the same period sits at 26.5% CAGR. In 2024, both revenue and EBITDA grew by 27%. They went from negative 83 million euros in free cash flow the prior year to positive 155 million euros in 2024. And also remember, TAV Airports reports in euros, so this growth isn't from inflation. Q1 2025 was weaker, as I mentioned. Revenue up 18%, EBITDA up only 5%, and negative free cash flow, similar to last year's first quarter. Again, this is normal for Q1, when air traffic is lower. On the debt front, they have 1.7 billion euros in net debt, which is 3.5 times their 2024 EBITDA, and roughly 3.5 to 3 times expected 2025 EBITDA. The sector average is around 3 times. So after all that capex, they are back to industry norms, which is great to see. In the past, this multiple was as high as 7. Regarding their guidance, one thing about TAV is that they have a history of meeting their expectations or even exceeding them. I personally believe they will hit their numbers again. Taking an average EBITDA of 550 million euros, and we need to remember that Antalya Airport isn't consolidated in these figures. Antalya had an EBITDA of 135 million euros in 2024. And assuming another 150 million euros, which is conservative given the new terminal, we get to a total EBITDA of around 700 million euros for 2025. But as Charlie Munger famously said, EBITDA is just bullshit earnings. So assuming about 1/3 of EBITDA converts to free cash flow, we are looking at roughly 230 million euros in free cash flow against a market cap of approximately 1.9 billion euros, giving us a multiple of about 8.5. I don't think that is high, considering the business mode, earnings reliability, and completed capex phase. Also, the upcoming dividends. I believe TAV remains a solid opportunity, especially with the S&P 500 at the current levels. I expect the next decade to be challenging for index investors, making TAV a relatively safe bet. Just don't expect Nvidia-like returns. Actually, if you are looking for Nvidia-like returns, I am probably not your kind of channel. I aim for 27% annual returns to double my capital every 3 years. Despite achieving over 100% last year, I don't think that is sustainable, and I am sticking with my 27% target. So this is it for this video. As I mentioned, if you want to get access to my detailed analysis of these companies, you can check out my Patreon. Other than that, take care of yourself, and I'll see you in the next one.